And finally, some words about the commodity block of currencies, where we still keep our short-term trade recommendation in the dollar Canada, but losing any kind of position in other currencies. As regards the Australia dollar, we still suggest that the current strength of the United States currency should end around longer-term uptrend line located at 76.10. Anyway, a weekly or daily closing below these lines should, in this case, we should reevaluate the overall situation with the Aussie dollar. But let's do that if we really have it in the nearest future. Let's see how the market will open next Monday after a long weekend. But at the moment it's a little bit premature to say that we finally turned around and now we'll go only to the downside regarding this currency. The New Zealand dollar, where we also closed our long position at entry level, the pair is very close to retest its moving average 200 daily line, which lies at 71.82, and daily closing below this line for sure should produce a kind of lower levels for the currency. But from a longer term point of view, next barrier will be the level of 67, where is kind of longer term uptrend line. And the dollar Canada. Here the situation is not so bad as regards the other commodity block of currencies, because as we know, the NAFTA negotiation smoothly progressed in the better side for the Canadians. Also, we know that the last portion of domestic data was quietly good for the Canadian economy. I mean inflation, especially inflation numbers of last week. Don't forget about the Friday's CPI numbers. And also we suggest from technical point of view, while the pair is below psychological important level of 130, where is also, as you can see, the head and shoulders pattern, where is also the resistance of the right shoulder line, neckline. And while we below this line, the pair should finally break below the support level of 138.28 and probably go much lower with the first reliable support around 127 and more important around 126.10. As regards the dollar ruble, the situation here is also very tricky and very interesting. As you can see on the daily chart, we drawn a kind of downtrend line drawn from the highs of November 2016 through the highs of November 2017. And from this point of view, let's see, it lies not far from here. Also, very close to the moving average 200 daily line of 58.13 and a half. That means one interesting moment, that if we see a break above this line and successful closing above, that will mean that probably in the nearest future the ruble weakness could accelerate. But at the moment it's a little bit premature to say about this. Let's see how the situation will develop in the nearest future, because from a point of view of longer term, the pair still trades inside of the range between 61 and 55 and a half. At the moment, that's all. It was FutureTrend channel with you. Stay with us in the future. Bye bye for now.